Hey, welcome to the exchange. Let's take a look at the EV producer Rivian. Let's look at their production ramp up as well as their cash burn rate and look at what the company could be valued at. So this is the model I built of Rivian real fast. So what you're seeing here, they say started producing revenue in 2021. In 2022, looking at roughly over $2 billion of revenue. They're saying they're going to basically produce 25,000 units this fiscal year, which will be, we'll see how they do that. It's going to be a bit of a stretch, especially in the Q3 and Q4 of this year. But I'm saying by 2027, and this is a $20 billion company potentially. You're going to notice here cost of revenues are actually be above their actual revenue target. So it's being above revenue for 2022 and 2023. So basically all it is basically as they ramp up production, you're going to have very high fixed cost per unit. But basically as you ramp up production volume wise, those fixed costs per unit should drop dramatically, which is why it should go cash positive or basically profit positive. I'm saying by 2024. So I want to show you this as well too. This is from their shareholder letter. They actually reiterated their guidance of 25,000 units this fiscal year overall. In Q1, they only made 2,500 units or so they're about a tenth of the way there for the full year guidance. Now that was to be expected. It was supposed to be a light Q1 and then pretty a heavy Q2 and Q3 for production overall. But again, we'll see. They have a long way to go for this fiscal year. Now I did it in my guide or my model. I actually made it missing a little bit, so I actually had them hitting about 23,000 units or so. So they should fall a little bit under there too. We'll know more in the post Q2 earnings call, kind of where they're at and kind of that glide slope for the actual full ramp up. So I want to show you this as well too. This is from their actual shareholders letter as well too, by copy and paste it in the actual model itself. So supply chain continues to be the bottleneck of our production. This challenge has continued across a small handful of technical components, such as semiconductors, as well as a few non-semiconductor components. Since March 31st, 2022, we've been forced to stop production for longer periods than anticipated, resulting in approximately a quarter of our planned production time being lost due to supplier constraints. Encouragingly, as we demonstrate our production ramp, our suppliers are leaning in to help ensure we can achieve our targets. So overall, this doesn't sound very positive. At 25,000, unit production this fiscal year. If this continues into Q2 and Q3, I think they're going to miss that. I think that's more likely, but again, we'll see when they actually get the numbers itself. So another thing to look at here too is actually the EDV order. So EDV is electric delivery van. This is the giant Amazon order they had. I believe for this year they're producing called the E700 series. It's basically a 700 square foot delivery van. Some have already been shipped and are actually at Amazon lots right now. Their goal right now is to produce 10,000 units this fiscal year overall. The entire order size is about 100,000 vehicles itself. Also notice too here, Amazon has an 18% stake in Rivian itself, so they're a massive stakeholder in Rivian overall. Ford used to be, but they actually sold their stake just recently. Overall, basically minimize the volatility of the actual portfolio itself there. But one thing we don't know is the actual EDV contract. What are the actual margins itself there too? We don't know if, hey, is this break even, is this highly profitable, etc. If nothing else, if I had to guess, this feels almost like an order where it's like a quid pro quo where, hey, Amazon gets basically cheaper vans overall and Rivian gets massive amounts of production overall, kind of initial, basically start state production for some of these EDV vans. Now, this deal should be done by 2025, but again, we'll see based on production ramp. So moving on to OpEx, operating expenses here. This is what I modeled out real fast. You notice here that they actually have the 663. This is from stock warrants in 2021. This is a one-time hit, so it was basically basically inflated for OpEx for 2021. Again, it's going to keep increasing. As they ramp up, SG&A should increase dramatically. R&D should increase quite a bit. I'm having it top out in 2025 or so. Basically, once they get full rate production, full line of research, etc., it should kind of taper down a little bit potentially. But again, SG&A should ramp up as they grow, on a unit per unit basis. Now, OpEx actually does include stock-based compensation, which is why I have total OpEx right here, but then I have OpEx excluding SBC, excluding stock-based compensation, which it gets pretty dramatic in the later years down the road, especially like 2025 and beyond. Also included here is OpEx excluding as a percent of revenue, excluding SBC. So you can see here, it's going to be dramatically high. Basically, as you ramp up, you're going to have very, very high OpEx because revenue itself is so small. Again, I'm saying by 2027, this is roughly 18%. I think right there is kind of the healthy range they need to get to really be a profitable or very profitable company overall. Obviously looking here like 2022 is going to be, it's going to be rough, and really 2023 is going to be rough too. But 2024 it gets a lot better, and according to this model, based on the ramp up they actually are going to have. Looking at here, net income, I'm saying this year they're going to lose roughly $4.2 billion. Even same thing in 2023 almost. It will get better in 2024. Also included down here is the CapEx, which is capital expenditures. Just give you an idea of basically this is like future investment they actually put in their facilities, put in their actual process flows, etc. So I'm saying here, they're saying $2.6 billion this year. I'm saying next year, 3.3 billion, then it drops down to 2.8 billion in 2024. But again, these are massive, massive capital injections here. So if you had to guess right now, I mean, you'd say, hey, roughly cash burn rate for 2022 is roughly $6 billion or $6-7 billion. Same thing in 2023. I mean, you look at cash on hand right now, I believe it's $17 billion on their actual balance sheet itself. So between 2022 and 2023, the vast majority of that is going to be burned away by this actual net income loss as well as a capex hit. So looking at the valuation down here, I took FY27's EBITDA. I threw an EV, which is enterprise value over EBITDA multiple on it. I threw 14. Anywhere from 9 to 20 is kind of your sweet spot in that range. For example, Tesla's at 38 forward EV over EBITDA. Now, this is a software company as well too for Tesla, so it's a little bit higher, a little bit premium there. And then from that, you get an enterprise value, cash equivalents. I'm saying $7.5 billion. I'm saying long-term debt of roughly $14 billion. It gets me an equity value of $43 billion. Now, I'm assuming a pretty high dilution rate for stock-based compensation, roughly 4% per year. This might be low, this might be high. We'll have to see kind of what the burn rate is, this year and next year as well. Shares outstanding, I'm saying 1.1 billion, and look at here, look at a share price of $37.81 as a fair value based on a 14 multiple. Now, if I go down to 9, it's going to be roughly $22. So I mean, it's much lower than it is right now. But if I go up to 20, you're seeing $56 there too. So we're really playing in that range overall right now. Now, the downside risk here is by far, is if this production ramp slows down or gets delayed until like 2023, 2024 and beyond, because I mean, they still have a very high just OPEX cash burn rate there too. So if nothing else, if it gets delayed at all, I mean, this will drop, the actual price target will drop dramatically based on that, basically delayed production. Hey, but that's Rivian. We'll see how it shakes out. I'm going to do probably an update video post Q2 earnings, kind of see where everything lands at and see how the OPEX is changing basically over time, as well as maybe margin projections as well too. If you like the video overall, be sure to hit the like button down below. Also comment your thoughts on Rivian down below as well too. If you like the content overall, be sure to sub a channel right there for content just like this. But yeah, that's the exchange.